What is up, everybody? Today is episode 3 of the Day Trading Bootcamp. I hope you're all excited for this episode because I know I am, because today is the first day that we get to actually do some sort of technical analysis. What is technical analysis, you might be asking? Well, that is just how I make myself sound a lot cooler than I actually am. All technical analysis is just charting, I guess. So just when we make our lines and our boxes on the chart and we try to analyze what the hell's going on in front of us, that is technical analysis. That is all. In today's video, what we'll be covering is market structure and highs and lows. So it is super simple stuff. So I won't waste any time. Let's get right through this, and you guys should probably be able to crank through this video and go right on to the next. We're still on the really simple stuff here. All right, so getting right into the swing of things, we have market structure and trends. So that is the first thing we're going to be covering. So what the market structure is just the structure that the candlesticks are forming in front of us. And what a trend is just the general trend that the market structure is in. So really advanced stuff here. We have two different kinds of trends. We have an uptrend and we have a downtrend. What this means is if you are in an uptrend, the market is going up. What this means is if you are in an uptrend, the market is going up. Same thing the other way. Downtrend, the market is going down. How do we know this, we might ask? That is through the highs and lows that the market is forming. So if you're in an uptrend, you will notice you're making highs, lows, higher highs, and higher lows. See, because this is so advanced, you might be confused already, but if you are making higher highs and higher lows, our lows are higher after we form a new low, and our highs are higher after we form a new high, we are in an uptrend. Same thing the opposite direction. If we are in a downtrend, we are going to be making lower highs and lower lows. Lower high, lower low. You get the gist. It's just which direction is the market moving in. So in order to spot these highs and lows, you actually have to know what a low is on the chart. So I will point that out for you because a low and a high might actually be a little bit more complicated than you think. All right, what a high and a low is just a bullish and a bearish candle that are touching each other. So this right here, we have a bullish and we have a bearish candle. This would be a high. Low is the exact same thing, just obviously on the bottom or to the downside would be a bullish and a bearish candle touching each other. So this would be a low right here. Now here's what a high and a low isn't. A high and a low is not just the top and the bottom of a candle. Like I said, it has to be a bullish and a bearish candle touching. So this candle, for example, right here, that's not a high or a low because it's just the middle candle of two bullish candles. That's nothing of relevance to us. Same thing for a low. If you have three bearish candles touching, this right here, the bottom of this candle would not be considered a low because, like I said, there's not a bullish candle touching that. Now, you put this together with the trends that we just learned, and you start marking out your highs and lows, and you can spot if we're in an uptrend, if we're in a downtrend. So right here was a good example. We were forming higher lows and higher highs. Higher lows, higher highs. This certifies that we are in an uptrend. Pretty simple stuff. Now let's find an example of a downtrend. This area of price right here is a clear example of a downtrend. We are clearly making lower lows, lower highs, lower lows, lower highs, and the market is just generally trending down. This is not advanced stuff. Now, one thing that is a little bit more advanced is a change in state of delivery or a market structure shift. So that would be when the market flips from bearish to bullish order flow. How do we know this? Well, that is what I'll get into right now. All right, so when the market changes directions, we get something that's called a break of structure or a CISD or a market structure shift, whatever the hell you want to call it. You have probably heard it referred to in 9 different ways. It seriously doesn't matter. When we get specifically into order blocks and CISD, I'll explain the fine differences between them, but for now, it really doesn't matter. Just market is switching directions. How do we know this? Well, if we're in an uptrend and we switch to a downtrend, we'll stop noticing higher highs and higher lows. So I drew out an example here. Higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low. So once you see lower highs and lower lows getting put in, this would be a good sign that the market is switching directions and starting a downtrend rather than continuing the uptrend. So this kind of helps you spot on the high time frame where we might be heading in which specific direction due to the market changing structures on the higher time frame. Obviously, to the upside, it would be the exact same thing if we were in a downtrend, and then instead of continuing lower, you notice that we started continuing higher, flipping directions, making a higher low, higher high. We now would have changed directions, got that break of structure back to the upside again. It's pretty simple stuff. You can test this on the charts for yourself, but let's get into an example. So a perfect example I found was right here, is we were making our highs, our lows, lower highs, lower lows. We were in a clear downtrend. But what you start seeing is the market slows down, we start going sideways, but then you start seeing higher lows get put in, and then we see a higher high get put in. We know that the market has officially switched directions once we get that higher high form. So we had low, high, Then we start getting higher lows. Didn't quite get a higher high there. Another higher low, higher high. There we go. Market has changed direction to the upside. We got that break of structure to the upside, showing us we might continue this bullish pattern to the upside. Same thing in the opposite direction here. We were in a mini uptrend. High, low, higher low, higher high. And then you start to see us sort of flip directions to the downside. So we had doji candle, lower high right here, and a lower low right there. We now have flipped bearish order flow. Then you'll see this trend carries on. It doesn't just, even though this is a pretty vast move, the trend continues. Lower high, all the way off my screen, lower low. This was just a simple break of structure or market structure shift to the downside. Now, all that being said, I hope you guys haven't struggled with this too much. This is pretty simple stuff. I mean, it's not like this is rocket science here. We are just literally spotting general directions. Like, this is like fucking second grade geometry. So don't overthink this stuff. But I encourage you guys, after every single video in this bootcamp, now you can start going out of the charts for yourself and just looking at it and spotting it in live time and seeing examples of this actually playing out. So see the market trend, see the market structure, and then watch it shift. See us flip order flow to the downside or to the upside. You get the gist. That being said, this was the most simple concept that we will go over. Next video, it's going to get a little bit more advanced, but we will just carry on through the bootcamp, and we have to start with the simple stuff before we can get to the advanced stuff. So keep chunking away, guys.